Good morning. My name's Ryan Littlestone from forexflow.live. Today I'm going to talk to you, continue the theme on dollar yen that we were speaking about last week, just to see what the further developments have been in this pair and how it's trading now. Now, last week we spoke about how the 108 level was key and pivotal to the next direction of this pair. In fact, we got a decent bounce around there up to 109. We had a failure at 109 and we're back down again trading at the 108 level. Today it's looking fairly weak. The bounces aren't looking all that strong, so there's a strong possibility that we get a break of this 108 level. We saw a break last week, but it didn't last. It popped down to sort of 107.80, didn't last long, and then we got back above and we had another run higher. So really what we want to look at this pair is how it's performing at this 108 level. Is it going to stay above and continue higher? Is it going to come under and then we see another move lower? So on the chart we highlighted basically the top and bottom of the range of where it could go with this 108 key level. What we also looked at is on the intraday basis how this level has developed since the flash crash. What are the levels that we're looking at now to trade? We saw a very strong rejection of the 109 area. We've heard that the market is called offside here with the flash crash, and if you look at the speculative positions on the CFTC data, a lot of those longs, dollar yen longs, got in at the price of when it was round about 109.50. So that's when they started building these long positions that they've held for some months now. That was sort of the middle of last year. So these guys are all offside now, and they're hitting the rallies to try and lessen their loss and lessen their risk in the trade. So we know that there's strong offers to sell around the 109 area all the way up to 109.50. So it's going to be tough to get up there that high, and we're going to see good sell interest there. That's the sort of area to look for shorts if you're going to test the resistance up there. Conversely, what happens if we get under this 108 level? Well, if we get under there, you know, we've got minor levels that developed since the crash. 107.50 is one I've highlighted on the chart there, something to keep an eye on. The real line in the sand is down just under the 107 level, around about the 106.60, 70, 80 area. It's still a bit flaky down there, but that's where we found support immediately after the flash crash. And that's a key point because that's where the market's come back in and said, okay, we've had this move. This is where we're going to start putting our bids in. This is where we're going to start keeping the support. So that's an area that we're going to look at if we get under this 108 level. I'd expect to move at least down to the 107.50 area. You can look at that level for a long, but keep it fairly tight. I wouldn't go too heavy into a trade there because it is a minor point and we have to let these levels develop. Certainly again down into the 106.80 is another level to look at. No doubt we'll see support down at the 107 area as well, naturally, as we do with big figures. And really, that's the easy way to play it. The 108 level is the key number to play. While we stay above and while it's support, then you can look at a tight long there, looking for the upside again. And when we go below, if we get a confirmation below, that means we break below the level, we come back up and test it, and it holds, and then we head back down. That confirmation test is what you want to look at to short. It's what I'll be looking at to short because that then suggests that the seller's in control. We're going to dip down further. So that's the way to play dollar yen. But just one thing, last thing I'd like to say, it's obviously a big week for Brexit this week. It's going to be very volatile in the pound any time between now and the meaningful vote tomorrow evening and into Wednesday. You know, it's quite easy to look at this pair, the pound, and say, right, a lot of volatility, there's a lot of pips to be made, but there's also a lot of pips to be lost. You know, one headline and you can be blown right out of a trade. So just a quick warning there to be careful if you're trading the pound. Know the risks. Know that you know, it is possible to hit a headline and be offside very, very quickly. We can just as easily be trading 135 as we can 120 at the end of this period. So just take care and hopefully survive, and we'll see you next week.